Oh, aren't you excited and fortunate that you are right now tuned in to the Equity.Guru Investor Roundtable with Rob, Chris over there, TK up there, Michelle way over there. Today we're talking about Element Nutritional Sciences. It is ELMT on the Canadian exchange, and it's good eating, right, Chris Perry?
It's it's good. If you're like me and you're old and things are starting to creak, and when you get up out of your seat, you make the following noise. You kind of want to worry about your eroding muscle health, among other things. And Element Nutrition created a product called Rejuvenate Muscle Health, which, when taken as per direction, apparently, according to the research, helps people of a certain age rebuild muscle after injury or avoid losing muscle through average everyday life. These products, you see them at the drugstore. They all look the same. Ensure is one, Rejuvenate is another. If you shuffled them around quickly, you probably wouldn't be able to tell which one is which. And the evidence of that is that Element is seeing their revenues go up pretty quick. 212%, I think, was the number of the last financials they dropped. The company does lose money because it's just gone public, so it's had a lot of professional fees, a lot of advertising and marketing, and as well, it's getting out there on store shelves, which is not a cheap exercise. Generally, to get on a store shelf, you've got to either pay for the space or you've got to show enough success on the bottom line that you can kick someone else off. And Rejuvenate is in some 8,000 or so stores across North America, plus Amazon, plus. The science of it is all on the website. I won't get too much into that, but I'll say that I've tried it. It tastes good in comparison to the other products out there. I'm still standing here, so apparently it doesn't kill you, if nothing else. But the company, I think right now is a bit of an interesting one because the stock chart is in the toilet. It came out at around 80 cents, did a financing at about 60 cents, and has kind of dropped down beneath 47 as a result. I think there are a lot of good things about this deal that haven't really played out just yet. If you look at the financials, $3 million loss on the first go around, people look at that and they shake and shudder, but that's pretty standard with going public. And the actual revenue numbers are better than a lot of cannabis companies that are out there for the last 2 years. So all told, for me, it's a bit of a win that's disguised as a loss.
TK, go deep and tell us what you think of ELMT under CEO Stuart Lowther.
Oh, yeah, awesome. Like Chris mentioned, the financials don't go too far, but I can touch on just quickly the sales figures for the last 6 months ending in June. There was $1.4 million in sales, and majority of the expenses are professional fees and advertising fees. So because of the current cycle of where the business is, this is probably not their long-term objective to spend as much on advertising and marketing. It's just to get the heads up. It's difficult to get inventory space, especially these days on a market that's so large, that is so in demand. The brands or the retailers are looking for high quality brands to put on their shelves. So you kind of have to be very aggressive with your advertising at the beginning. But the best place to look for the longevity right now for Element is their clean balance sheet. That's not a word you hear a lot in my peer group, but I love a clean balance sheet. It's $6 million in cash, growing accounts receivables, meaning they're making purchase orders. Their inventory book is increasing as well, meaning they have more products on hand to match those receivables. The only concern or thing that the market would probably be afraid of is the growing accounts payables, but that's part and parcel of their day-to-day operations. They have to match what they're getting in orders with their suppliers so that they don't have a cash flow burn. So most people would see it on the line item as debt, and that deters them away from it. But it's an accounts payable. It's not really a debt obligation for them. It's more of a contractual agreement between their suppliers. The actual debt in their balance is a loan, a long-term portion of their leases. And that's just an accounting thing that had to be put in these days because of Enron and stuff like that, having off-book liabilities. So they actually have a pretty clean balance sheet with cash, receivables, and accounts payable, which is perfect for a company in the industry that it's in.
Yeah, and I don't want to make any presumptions, or definitely don't want to make any assumptions, but we always hear about, because of COVID, the supply chain situation. I would think that this stuff is produced in North America, so or maybe right, in their own backyard. So they're not bringing in materials like this, obviously, drink that has a shelf life from China or Vietnam. So that factor on a macro scale, I'm assuming, is one potential little bonus. Michelle, what's happening with the stocky wacky?
As Chris said, it's not looking too good on the chart side, but some good news this month. We talked about the earnings. They talked about an increase in the sales velocity and a new product pipeline as well. They even talked about their Rejuvenate product also being now offered at places such as Sobeys, Safeway, Foodland, Freshco, Price Chopper, Farm Boy, in a deal here with Longo. So news is coming in, but the stock is not looking that good. There was some hope here at around the 63 cents. That was a support level or a price floor that I think we were watching. Saw some bids come in. It looked really, really good. But instead of breaking out into new highs, we did reverse and we closed below with a pretty strong red candle there on October 1st. I just want to show you guys here the historical data. I mean, today, 9,000 shares traded. However, we've had some six-figure, in terms of numbers of shares traded on the 21st and the 19th. And then, that big sell-off that we saw on October 1st was pretty big volume. It was 441,429, the most volume that I see here, pretty much by far. Some 300,000 shares, but 441,000. So when you see that many shares traded with a big red candle like that, it's quite bearish. It's not going to lie. Right now, it's sort of akin to catching a falling knife. That's what people say, but maybe some hope here. The 50-cent area, that's where we did close today at 50 cents, is seen as like a major psychological support zone, especially for stocks under $1. We're talking about 25 cents, 50 cents, 75 cents, and of course that $1 level. But right now, because we have no price action, we're now depending on these psychological numbers. So I would just watch. I actually do like the sector, though. I'm big on health. I think the health sector and these type of vitamins and supplements and protein drinks and such are going to be a huge market going into the future. I mean, it already is right now, but I would just be concerned about all the competition that's out there. That's the only sort of concern I would have. But I am bullish the sector, and we should let's watch and see if we can build some sort of support and see some rising volume and buyers stepping in at 50 cents. But other than that, it might still be continuing that downtrend.
Let's start with Chris in terms of spending my money or not spending my money. Part of me thinks, just as a novice non-tech guy who thinks, okay, well, if it's down there and is it a hypothesis where you can say buy and just sit on it and wait for this thing to get back? Is that even a concept, Chris? I think you're muted, Chris.
Sorry, there, my cat was meowing. It really comes down to your risk management and what other opportunities you might have at the moment. I think I'm fairly up to date on what happened with that big sell-off at the beginning of October. Back in June, they did a $5 million bought deal at 60 cents. When that deal was 4 months old, and thus most of the paper is free trading, that's when the big slide happened. So I would suspect whoever got in on that bought deal cashed out, or at least began cashing out. You've seen the stock try and climb back a little bit. It hits that 60 cents, and then there's more selling. So I wouldn't necessarily buy in today. I think you'd be buying in on someone else's get out of jail card And I think that really what you want to look at is when does that stock come back through that 60 cent mark? If we go another month of the stock dropping, congratulations, you're going to get it cheaper. If it keeps butting up against that 60 cents, that's telling you that buying in right now isn't going to get you anything beyond that ceiling. So I would wait and see whether that person wants to keep getting out, whether there's enough news to push through it, or maybe convince them to hold. And that might be your signal, I think, to start looking at getting back in the stock. I like the company. I like the deal. I like the idea and the product. But sometimes, these early financing deals really become a downward weight on the company for a while. And, we've seen, especially in the cannabis space, some companies take years to get out from under those early financings. They just, no matter what they do, can get through it. And then by the time they actually start shedding that weight, the stock chart just looks so terrible that it's hard to claw its way back. That's not this. What this is one early deal where they got money in the door, they got what they needed to do, they got the products on shelves, but now they're paying the price for it. And unless they can convince that guy or those guys to stick around and maybe, double down a little bit, we might have a little bit of a hard time getting up in the next month or two. The other thing to look at is there are warrants attached that are $1. So if the thing does go on a bit of a rip, that $1 level might be the point where it starts to peel off back again as they start executing those warrants, maybe selling stock to get those warrants. So that's going to be your next thing to look at. But I think right now, there's plenty to like about the company. To go far wrong if you buy in at this point, you're just not necessarily going to get the most bang for your buck as you would if the thing was untethered.
TK, agreeing with the other fellas?
Yeah, I completely agree. Going back to actually what you were asking, Rob, about the inventories there, I was like, let me quickly take a look at their footnotes. And of their June inventory, most of it is $1 million is in finished goods, about 200,000 is in packaging, and then another $1 million is in subcomponents. So you could call it raw materials. So they do have a lot of backstock that's ready for a lot of the receivables or the purchase orders that they're getting. And that's always a healthy sign of a business that actually the business model is working. So management is deploying that capital well. And with an extra $5 million in the pocket, you can only imagine they do something to execute better. So maybe an increased sales force or spend more on ad space. And I think it's a good buy at this price.
So you're going to spend a little dough right now.
Yeah, I'll say 50% of your pot.
Woo!
Yeah.
Vishal, I kind of heard you allude to something, but I don't have a definitive answer from you on what you're spending, if anything.
Yeah, so I am bullish the sector, like the whole health sector and protein shakes and supplements and vitamins. I just think there might be some other competition. I might place my money somewhere else, but just on a technical basis, if I were to buy the stock, and I wouldn't be buying just now, I would wait for some sort of sign of support telling me that there are buyers stepping in, nice green candles, but also good volume as well, indicating that buyers are stepping in and defending this area. But actually, Chris sort of took the words out of my mouth in terms of a technical play. You would wait for that 60 cents to 62.5 cent zone to be taken out. And then technically, when you're above that, the downtrend is then over just on a technical basis. So I would be waiting for those two things before I decide to enter.
All right, you guys are saving me a little cash for lunch money lately. It is ELMT on the Canadian Exchange. Stuart Lowther is the CEO of Element Nutritional Sciences. We recommend strongly that you do your own research and consult who you need to consult, because we can't guarantee a darn thing, but we can provide lots of information, and we're glad you're along for the ride on this edition of the Equity Guru Investor Roundtable.